Hi, good afternoon, everyone. It's great to be here. While Mr. Rao has done a great job of waking everyone up after a post-lunch session, so I'm going to make the best advantage of it. What I wanted to probably discuss today is how the ESG financing environment is changing in India. I come from an industry which is very closely working with the MSME sector, and in what way are we contributing to a sustainable financing model? So that's essentially, I'm trying to draw the threads between ESG financing and the MSMEs and how the overall sector is contributing towards it, and what are the other things that can be looked into. Very quickly, the environmental, social, and corporate governance, the principles of ESG financing have been there in the market for the last close to 5 decades or so. But I think it's seriously picked up steam only in the last 1 decade or so. Is probably the last 8 to 10 years, wherein ESG financing has become very seriously being spoken of, and attention is being paid by all investors and companies alike. The ESG financing space in India currently, the asset under management in ESG funds, if the last numbers which I have with me is of about $1.4 billion in the year 2021, which grew over five-folds over 2020 from $275 million. Now, this is we're talking about AUM. I am aware that green bond issuances, which debt market is one of the most active players in the ESG space, and they have been doing some phenomenally great work. So the debt markets, I think, have contributed a fair bit to the last, across various industries put together. I mean, renewables, electronics, food services, food processing industries. So this put together, I think the last estimate which I have is that at least close to $7 to $8 billion have been invested in the last 2 to 3 years. This is from industry sources. Now, clean energy, renewable energy is one of the favorites from the investor side. Roughly 65 to 70% is the estimate that is going to the renewables sector in the current time. I think one of the most recent ones which we've been now, which has become relevant and people have been talking about, is Adani Energy. So Adani Energy, I think the green bonds were a great success when they were launched in 2021. And steel, cement, pharma, I think these are the other players which have been tapping the ESG funding. As I said earlier, bond markets are one of the leaders in pushing the ESG objectives in the Indian ecosystem. Now, I was reading one of the reports from Bain, and Bain is of the opinion that in the next 4 to 5 years, 90% of investments coming into India will have some or the other ESG clauses attached to it, and hence it is extremely relevant that as Indian people from the Indian financial ecosystem, from the corporate houses, start giving it due attention. Very briefly, I'll touch base on some of the policy level efforts that have been taken to ensure that ESG financing objectives are met. I think the Companies Act of 2013 introduced the CSR spending objectives. That I think was one of the major key steps. In recent times, SEBI has made BRSR, the Business Responsibility and Sustainability Report, to be filed by the top 1,000 listed companies from 1st April 2022. These are the nudges from the regulator. I think one of the key factors was, one of the key points that put us on this roadmap was also India joining the Paris Climate Accord. Globally, I think the people looked at us with skepticism, but I think India has far outdone their commitments and milestones. I think the global industry now recognizes that India is one of the most serious players in the global economy, committed to ESG objectives. Just as a quick reminder that India has promised to achieve net zero emissions by 2070. Now, this is the broad ESG financing space in India. Where do people like us, people who are associated with the MSME sector, come in? What is the materiality that we bring in? And what is the difference that we're making to the market? I think we'll try to touch base on these 2-3 aspects in the coming few minutes. Now, when I talk about MSME sector, I think one of the foremost form of financing which is prevalent and effective is the supply chain financing. We at M1 Exchange are essentially, to put it in a nutshell, we essentially facilitate early receivables for MSMEs against their buyers' acceptances on a without recourse basis. Now, that's in one line, that's essentially what we do. We do this in a digitized environment and against a price discovery model, which is backed by finances, by bidding mechanism. So the financiers come and bid for invoices. So it's essentially receivables financing for the MSME sector is what we do. And that's where the correlation with supply chain finance is being made here. Now, when it comes to environmental concerns, social responsibility, and corporate governance, even if we just stick to the environmental concerns, 85% of planet's carbon emissions are coming from supply chain finance, from various supply chains, upstream, downstream, across various corporates, various industries. I think so that becomes a very, very essential, supply chain finance tools becomes very essential in controlling or rather propagating our ESG objectives. It's estimated that global supply chains need about $100 trillion of investment by 2050 to achieve the targets that they have set for themselves. Sorry. Now, what are the key challenges that we face? Absence of quality data and market standards. Essentially, the matrices which are to be built in. I think it's still in the process of evolution. The industry has been trying their best to standardize the same, but we still haven't come to that stage where a standardized format of the data can be trusted upon. I think even in the capital markets, I think their Nifty has a ESG index, but I believe that it is, while it may be representative, but it is still very thin. It's not broad enough. It's not deep enough. I think I'll just leave it at that. I think the capital markets probably needs to do better than the debt markets. The debt markets, I think, have been leading this charge on the ESG till now. I don't know if I should say this, but since I've written now, I might as well say it, that virtually no company knows this entire supply chain, upward, downward. I think they haven't, we still have been, the industries and companies have been working in silos, and I think the connecting the dots is still a major job to be done. I think that's something which is obviously an area of improvement for us. And even in areas where some sort of supply chain financing is structured against ESG principles, those two are restricted to the top tier suppliers. So the trickle effects down the value chain is not there. So if so the topmost suppliers who are participating in an SCF structure, that's where the benefits typically get closed down to. So what are the opportunities here? I'll speak about the relevance of the MSMEs, but to very quickly, I think TREDS platform, which have come up in 2017, I think they are probably best geared to address this requirement. Today, financial institutions are open to working with fintechs, which can deliver more understanding and value to the financial services sector to ensure that they put the focus in the right areas. Obviously, Indian government is encouraging green bond issuances and contemplating tax benefits to make the instruments attractive to investors. I think that's on the broader debt market side. RBI has recently, in July 22, also released a white paper on climate risk and sustainable finance. I think we expect this to by September 23 is when the entire discussions around it and a policy formulation should kick in around it. Now, SIDBI has, I think 4 to 5 months back, SIDBI took, signed up an MOU with DNB to create a quarterly SIDBI DBA Sustainability Perception Index. The MOU has been signed, though this index is not being widely used. I think this will really nudge MSMEs also to adopt the ESG framework. This is the point where I talk about how material the MSME sector, supply chain financing will be to the relevance of it to the ESG economy. MSMEs, as per some of the recent data that I picked up, SMEs contribute about 30% of India's GDP, roughly about 48% of India's exports, and 45% of manufacturing output. So while the industry is fragmented, players are small, but if we look at the cumulative effect that it carries on the Indian economy, I think it's fairly large, and as such, it is spreading across various industries, all sectors, and if we are able to focus ESG financing principles around this sector, I think the results are, we can expect extremely good results and outcome out of it. Traditionally, this is just, I'm going to take a step back as to understand the key challenges being faced by the MSME sector. I think I have tried to club everything together in 3 broad buckets. One is the financial assistance. Most of us sitting here in this room would understand that the value creation vis-a-vis the value extraction that MSMEs get from the financial ecosystem probably is not inconsummate. The terms and conditions of the borrowing, the rate of the borrowing are substantial, are not exactly in favor of them. Leave aside the overall the pain that MSMEs go through in securing debt from the regulated financial services industry. Then the regulatory framework, which is very, very fast evolving in our current environment. So, introduction of the GST, the tax compliance norms that go along with it. I think that's something also which maybe which MSME sector will be probably lagging in doing the catch up over there. And then obviously the market forces which are there. So some of the key market forces which affect them are the competition. I think China could be one example. I think our MSME sector is, if we were to look at it, I think the Chinese players they have deeply entrenched the businesses where MSMEs are there. Technology is one area of a big catch up over there. Manpower, then unorganized and fragmented players. That's another part of the overall ecosystem that MSMEs operate in. I say that market forces are akin to a systemic risk which can't be done. It's a process of natural evolution. But on financial assistance and regulatory environment, these are the 2 unsystematic risks which can be typically harnessed and controlled for impact financing. Now, as I spoke on the last slide, that liquidity for MSMEs has been a problem, which is raising debt and how it has been a concern for the MSMEs, and how evolution of TREDS has kind of addressed that. Now, the broadly two pillars have kicked in. One is the policy level initiatives, the tech ecosystem, which have basically led to liquidity solutions. At a policy level, the policy level framework which are supporting the MSME sector is obviously the classification of MSME outstandings as part of the priority sector lending. So this itself is a part of becomes a part of the ESG agenda per se. Then the MSMED Act of 2006, which has laid stipulations on the payment time frames for MSME sector by various corporates. Then there are specific schemes which the government has launched on ECLGS, industry-specific schemes, the MSME credit card, then Mudra loans. These are specialized initiatives, specific initiatives that the government has introduced. Now that the tech ecosystem has evolved to support MSME financing, so we can talk about the Udyam registration, the India stacks, which is basically support, the key pillars are the UIDAI, eKYC, and the payment gateways, which have evolved in the form of UPI and PCI. GST, e-invoicing, e-way bills, these have come across as these have helped in ensuring that liquidity is made available to the MSME sector. Now, TREDS is one of the key MSME financing tools which have come up. I'm just going to talk about some of the key benefits that TREDS platforms bring to the table. One is that the entire structuring of the solution is in the form of factoring/assignment model, and hence these are typically balance sheet friendly. These are without recourse financing to the MSME suppliers and also to the MSME to their buyers as well. So these continue to get trade receivables and trade payables outstanding treatment in the books of accounts. Now, it also eliminates, from a risk standpoint, TREDS platforms play a very critical role wherein they eliminate buyer default risk. This is it establishes that, so there is also a price discovery which is happening, as I mentioned earlier. We follow a bidding mechanism which typically leads to price discovery, basis each and every, basis the quality of risk which is against which the bids are being placed. In some of the recent initiatives, I think as recent as probably 15 days to 2 months, insurance has been allowed on the TREDS platforms, wherein the invoices can be insured by the insurers who are going to join the TREDS platforms. So each and every invoice, there is a bit of element of insurance attached to it. On 8th February, RBI released a notification where the secondary market participation on TREDS also is going to be allowed. So banks could typically trigger, it could establish a practice of interbank participation on against these MSME financed invoices as well. And in a development earlier last year, the overall financer base has also been expanded by allowing NBFCs to do factoring businesses. So these are the key, I think, with all these, things already in place, I think liquidity solutions to MSME sector, though not fully addressed, but we are trying to do our bit on this space. We are also, as from MN Exchange, we've also launched the initiative of doing deep tier financing. From a product standpoint, which is approved by RBI, we call it small to small financing, wherein we could look at tier 2, tier 3 level of suppliers as well. And we have built a proprietary credit analytics engine, which looks at not only the financial, the statement of accounts, which typically people find it difficult to, trust, so to say. I mean, to put it very simply, the finances are not able to correlate the actual businesses against the financials which are presented by the MSMEs. I think and this is where our credit analytics engine kick in. We try to triangulate the financials vis-a-vis the other data points which are available, like GST, their returns filing, the e-way bills, and these are all mapped, and basically it helps in better understanding on the health of the businesses and for the finances to reach a better decision making. Now, these are things that we're already doing, and I believe that in doing so, we have already established some framework for ESG financing to kick into this MSME sector. Now, there is a large pool of MSMEs which are already available in the sector through M1 Exchange or the Trades platforms. There are other two players in the market. So put together, we will roughly have about, say about 50,000 odd MSMEs which are already available with just 3 platforms. So that gives a large pool of MSMEs to be addressed to. I mean, the efficacy of any solution that is introduced through these models will be humongous. We can really get substantial results from that. There is already a digital highway which is built, be it in terms of onboarding or be it in terms of transaction modules. I think these are already very, very efficiently managed. It's going to be it's just a matter of introducing the ESG advantages to the tool to ensure that we make the best use of this architecture which is already in place. There's a fair bit of, with 5 years of history behind us, there's a fair bit of data which is already available with the platform, and those can help better decision making. As I quickly mentioned, we have also, by using small to small finance or the deep tier financing model, we have already ensured that should ESG financing kick off in this through Trades platform, the benefits of it will reach to tier 2, tier 3 suppliers as well. Now, some of the key possible ESG bolstering policy initiatives that could come in is that PSL norms could be expanded to include funding limits to enable net zero transition. I think that's something which probably the ask could be to the regulators with that. Insurance fund to house hedging cost of green finance. Robust secondary market for green debt to infuse liquidity and create a pool of sustainable debt. That's another. And lastly, all financing on this platform should essentially become green finance. I think that's the overall objective. Very quickly about M1 Exchange, we started the business in 2017. Today we have roughly about, cumulatively we've funded about 41,000 plus crores of invoices through our platform. There are roughly about 1,175 to 1,200 companies, large companies registered as buyers, and another 15,000 MSMEs registered as suppliers on the platform. Completely paperless transactions, as I mentioned earlier as well. So that's a quick view of the Trades ecosystem which is there on M1 Exchange. We cover over 1,100 plus cities. I think we are a fintech, so our physical presence is never a challenge. We have all the onboarding tools and the IT architecture in place to ensure that the effects are, we efficiently reach the market. Very quickly, just to give you a sample of the overall growth and how the Trades platform is evolving. From a transaction volume, for the last 3 years, we are targeting a growth of about 100% year on year. In FY21, we did about 5,700 crores of financing, which doubled again to 12,600 in 22, and we are targeting 24,000 to 25,000 crores in the current fiscal. Similarly, the number of, the growth in the corporate side, FY22, we had about 900 large buyers, which is now going to be about 1,200 in the current fiscal. So this is just to give you an idea of the overall growth that's happening on the platform. I think the proof of the pudding lies in eating. I think very, very quickly, this slide is just to show how was the kind of price efficiency that M1 Exchange is bringing to the market. If I just stick to the last line, the last curve, which is a representative of the AAA rated papers. If in somewhere in September 19, this was about 8.04 at roughly above 3% spread over the repo rate. And if I look at December, I think that over 3% spread from repo has dropped significantly to about 14-15 basis points. In December 22, the repo rate was 6.25, whereas the average AAA pricing of AAA paper on the platform was 6.37. So it just clearly demonstrates that the value that we are bringing to the table. A quick comparison vis-a-vis the CP markets as well. if you see March 20th, the spread between the CP and the TREDS pricing for a AAA corporate paper was 3.28%, which is now actually minus 20 basis points in December 22. I think I'm just about to overstep, but I'll take the liberty of quickly talking about, about the business in 2-3 minutes time. Now, the overall efficiency is realized by using IT, the best of the information technology tools which are available in the market. The vendor onboarding, which is one of the key processes that we undergo, typically takes about 15 minutes on our platform today. We have mobile app to upload and authorize transactions. Customer services, since we are dealing with 15,000 plus MSMEs, 17,000 total number of stakeholders which are there spread across various geographies. I think having vernacular language availability within the ecosystem is very, very important to ensure that the messaging is never missed. We are a bank agnostic platform, so the variety, the color of the money, is the same wherever it stems from. And we carry an in-house tech team. This is just a sample of, the kind of businesses which are participating on the platform. So some, large names from auto, ancillary, cotton, manufacturing, pharma, construction, energy, agro, electrical. A lot of the PSU names which are active on the platform are sampled here, and this is a sample of the financer base which are there. So roughly we have about 51 financers, and it cuts across all sorts of public sector, private sector, NBFCs, factoring companies, all are available on the platform. Some of the awards and recognitions that M1 Exchange has got in the recent times, I'll just leave it at that. I've overstepped by about 2 minutes, so I'll pause here. Any questions, welcome, or we can connect over the later, somewhere around here. Thank you all.